The following is a presentation of TFNN.
Welcome, folks. You got half of the Money Masters here, and it is a pleasure to be with you, folks. Right now, you got the Dow up 73 points, S&P's up 9, Composite up 14, Small Caps up 5, Microsoft trading down 12 ticks right now. If we take a look at the King Dollar, what's King Dollar doing? King Dollar is up a half a cent. Gold trading out at $15.49 after going and testing the swing point low. We'll see if that is enough. Gold certainly doesn't have any juice to push through that swing point. Right now, what I do, you can watch us on Tiger TV, folks, and there's our life. There's basically 6 different areas that we focus on. There's 6 human needs that each of us have. Now, the 2 human needs that are my primary dominant focus are all about growth and contribution. It's why I absolutely love being here with you. It's my favorite time of the day. What I've learned, folks, is that if you're not giving, you're not living. So the question should be that you ask yourself today is, who are you going to give to unconditionally? And that's really the key, folks. It's about being able to give unconditionally. And when you think about it, folks, what you really need to understand is giving is all about making an investment in yourself. And when you make an investment in yourself, you'll get a return multiplied back, millions of times. Or I don't know how many times you're going to multiply it by, and you don't even need to multiply it. It's just simply going to come back to you. So go out and give. That's why I love being here with you. I will give you the best possible hour that I can. You can always give me a call. 877-927-6648. And folks, only by giving are you able to have more than you already have. And the markets, they're always giving us signals here. In about 1 minute, what the signal is, we're looking at the ES Mini here on my chart. You can watch us on Tiger TV. You can always catch the archive of this show on Channel 10. It is Wonderful Wednesday. Wonderful Wednesday means that we go up to Newton, Mass, to Basil Chapman next hour. Then we go all the way out to the West Coast to Larry Pesavento in Tucson, Arizona, and then all the way back here from 3 to 4 for the David White Band, the warm-up band for the Tom O'Brien Show from 4 to 6. Now, we're taking a look at the ES Mini, the 10-minute chart, just simply showing you the AB equals CD patterns that are out there. It made the next move up, which was 1339. Still have gotten no signal that this move is over, with the S&Ps up $8 and $8 and change, 8.5. So we did not get a sell signal at this stage. Of course, we would need a couple of candles to give us that signal. If we go take a look at some other AB equals CD patterns out there, because they're everywhere, folks. If we go take a look at the bond market, let's go take a look at the 30-year and the 20-year bond. Of course, I just have to find the tab along the top of my screen here. I changed up the tabs in order when I'm doing Tom's show versus doing the morning show, and I didn't get a chance this morning to change those tabs. And so now there we go, bonds, James Bond. And so we're taking a look at the bonds. The bonds making a 1 to 2.618, A to B equals CD. Folks, there's only one more level that bonds can get to in the ABC world, and that would be pi, 3.14, blah, blah, blah. Well, the actual A to B equals CD, 2.618 on the 30-year, the actual number comes out to 146,315. What did bonds actually get up to this morning? 146,310. If you're looking at this on Tiger TV, how does that work? A 1 to 2.618, A to B equals CD. And in this case here, the market is always giving information to you. It's always investing in you. It's giving you unconditional information. You just have to be willing to receive. You have to be able to open up your mind to accept the signals that the market gives you. I can show you those signals. You can learn them by yourself. You can take, years to be able to learn all that information, or you can allow me to do that for you this coming Friday by just simply condensing decades into hours. And you'll want to understand these patterns here, because it'll help you to understand where the market is going. When Tom and I were doing the show, and during the Money Masters show, and bonds were trading in the 140, I remember, when it was trading right above 143 or so, and I said, hey, the next target is 146. and 146,315 to be the exact number, and it gets up to 146,310. Now, you still don't have a bearish sign. You don't have a reversal sign, I should say, in bonds, and it could seek out that next level, 1 to 3.14, 1 to pi. And if it does that, folks, then that move is over for a period of time. Let the market tell you. The market is always giving you information. All you have to do is learn to become a treasure hunter. If we go take a look at the 20-year bond, and the 20-year bond, folks, is what you would want to really be trading the TBT off of. We'll pull up the 20-year bond. We'll see that it also is making an A to B equals CD pattern. In this case here, it's a 2.0, 1 to 2. Oh, there is another level after. Well, this is so after you do a 1 to 1.618, A to B equals CD, your next level, your next floor is going to be 2.0. Well, 2.0, 133, 165 is the number you had bonds two sessions ago on the 20-year get up to 133, 195. Yesterday, you're up at 133, 195 as well. Trading slightly lower. You still do not have a reversal signal there. And so without a reversal signal there, you would not want to be stepping into the TBT just yet. It's just that plain and simple. Let the market prove itself to you. You're going out there, you're gathering information, you're going on a fishing expedition. And just because, you know, I look for these specific candle signals, let the market tell me what it wants to do. Doesn't mean that that's what the market is going to do. It can reverse at any point in time. And all you've done is just missed a move. There's going to be another ABCD pattern that is out there. But I teach you a nice, safe way, a nice way to interpret the market, to be able to trade, and it works each and every day. If you want to understand what the markets are doing right now, we'll just go take a look at the ETFs, because it's doing what it's supposed to do. When you trade below a swing point, you're supposed to go back up and touch it. So let's go take a look at the SPYs. We're going to take a look at the daily SPY chart out here. The swing point you know that I'm referring to is the one from March the 6th. March the 6th on the SPYs, 201 million shares. The low on that, 134.36. You get below that yesterday on 207 million shares. So you got the juice. 207 million going against 201 million. You know, slightly more volume. That's what you need in order to get through the swing point, in order to be able to start establishing A, B, C, D patterns. Well, when you get below the swing point, it's only normal to try to get back in the range. In the range would be getting back inside that March 6th area, and at least go up and test it. What have the SPYs done so far this morning? Gone up and tested it. It got up to a high of 134.50. So it got inside that March 6th. You're trading below it right now. Volume-wise, let's take a look at the SPYs. You've been trading for 45 minutes. You've done 32 million shares. So let's see here. It'd be 40. It'd be about another couple hundred million shares. That's what's on store today. So you've got volume, and that volume, folks, is not pushing to the upside. That volume is pushing to the downside. So that's on the SPY chart. Let's go see if the diamonds are doing what they're supposed to be doing. Let's go see if the Qs are doing what they're supposed to be doing. And we'll take a look at the small caps as well. The diamonds getting below the swing point of March the 6th. Now, the diamonds got below the swing point on dramatically lighter volume. That swing point from March 6th has 14 million shares. Yesterday, you closed decisively below it with 6.7 million shares. The day before, you closed slightly below it with 6 million shares. There is another swing point out there, which is April the 10th. That's got 13 million shares. You could almost say that that's a swing point also that it's going against. The reality is, folks, not enough juice on the way down when you take a look at the Dow diamonds. So the diamonds are testing that area. It's trying to get back inside the range. That would be a close above 127.18. So you want to pay attention to the diamonds today. If we go take a look at the Qs, let's go see what the Qs are doing. And I'm sure that today what we'll also do is take a look at Apple, see what Apple is doing. So the Qs have not busted through the swing point from March the 6th. In fact, it stopped yesterday, stopped 3 pennies above the swing point low. Swing point low March 6th is 63.23. I think it was 3 pennies. Let's go back and take a look here. Actually got down to a low yesterday of 63.26. Okay, I lied. It wasn't 3 pennies, so it was 26 for... Yeah, well, it was 63.23 versus 63.26. That's good. I never lie to you. You gotta love that. So 3 pennies, stops 3 pennies before that. Now volume was picking up to the downside. When you take a look at the swing point volume yesterday, you had almost 67 million shares. March 6th only had 54 million shares. So when you are coming into a swing point with accelerated volume and you stop right before it, that's just telling you that it wants to blow through that area. Now, whether it's going to be today, don't know, but it is going to blow through that area. You're coming down with conviction, meaning with volume. So what are the cues supposed to do? Well, they're supposed to at least test the top of the March 6th swing point because they never got down below it. The top of the March 6th swing point being 63.72. What do the cues get up to so far intraday session? They get up to 63.78. You're trading out at 63.57 right now. Again, we're looking at the daily charts. Let's go round this out by taking a look at the IWM. That is the small cap, folks. Let's go see what the IWM is doing. IWM is testing the March 6th swing point low. That low is 78.41. It hasn't even been able to get up there. Now, the small caps, just like the diamonds, have not had the volume come out of it. So as the small caps have gotten below March 6th, it did not get through there with volume. You had 80 million shares on March 6th. Yesterday you had 54 million shares. The day before, you had 51 million shares. The last time it was tested, 64 million shares. So the small caps need some energy on the way down. Small caps being the closest, though, to the October 27th area. Now, the small caps, though, not have enough energy to even get up and test yet the swing point low from March the 6th. The high today in the small caps is 78.35. Again, expected to at least try to test 78.41. Our call number is 877-927-6648. Not enough fear in the marketplace in order to establish any kind of meaningful low at this stage. And what I mean by that is just simply going and taking a look at the tick index. Even with the moves down, even with the euro falling off of the European planet, you had a downtick yesterday of 15.08. That occurred at 3:17 p.m. That's the only real significant downtick. Not enough fear in the marketplace to establish any kind of meaningful low, folks. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Dow up 86. S&P's up almost 11 points right now. King Dollar still up 2 ticks. The DAX. Let's go over to Germany. You're going to want to pay attention to where the DAX closes today at 11:30. That's an hour and 6 minutes from now. So let's go take a look at the DAX itself. The DAX has traded inside the October 28th. For our markets, it's October 27th swing point. The high there of that swing point, 64.3060. You're trading out right now in the DAX at 64.3877, up 37 points today. You'll want to see if by the close, if it gives it up and stays back inside the lower portion of the trading range. The DAX is making an AB equals CD down, and it is going to head all the way down into the January 9th area where you're in the 59.87 area before it really releases some information to us. If we go take a look, as long as we are taking a look at some world markets, let's go look at the FTSE out here. The FTSE trading out. Oh, the FTSE establishing a nice little hammer candle this morning. Interesting. After making a B, C, D down. A 1-to-1 A to B equals CD down, to be exact. Let me get rid of the Fibonacci levels for a moment. Just clean this up. So let's go take a look at the FTSE. So the FTSE in Germany making one of Steve's hammer candles. If it closed right here, it would be a nice looking hammer candle. You had the market pushing down. So let's take a look at the AB equals CD down. The 1-to-1, and we would start off with the swing point high, folks, on March the 14th on the FTSE. 59, looks like 59.8907 as your A point. The B point would be the April 11th area when you make a low of 55.76. C point, if we just take a look at the retracement, let's take a look at that retracement level. And sure enough, 0.618. You can see that on the screen. That's why you want to understand your retracement level. So just a normal breathing pattern inside the FTSE. Of course, as it comes off that C point, it does it with conviction, suggesting that it wants to do more than a 1-to-1 A to B equals CD. We let the market tell us what it wants to do. The 1-to-1 A to B equals CD was truly completed this morning. Got down to a low of 53.54 even, trading out at 54.45 right now. And you do have a hammer candle, almost a type 1 hammer candle So we'll pay attention, or you'll want to pay attention to that tomorrow. We'll certainly pay attention to it tomorrow if that is the way that things end up, because it'll tell us whether or not that's a head fake or not. But first, we've got to see how it closes today. The Hang Seng, as we talked about in the first hour of the Trader's Edge show, an absolute failure of a 3 drive to a bottom pattern. That says the Hang Seng wants lower prices, wants to get down in the 18,292 area. And I wish I had volume for you to let you know what that volume was, but I don't. And so we'll just have to move on to the next chart. Let's go take a look at the Nikkei. Let's go see what the Nikkei was doing. Nikkei completing the 1-to-1 A to B equals CD. Actually getting below that area. And as I've mentioned to you, the Nikkei wants to pull back into this 85.95 area. So it keeps getting closer and closer, which is a beautiful thing. Now, we are going to want to pay attention to the volume as it gets into that area, because that is where a number of you are taking a look at maybe making a longer-term play in Sony Corp. SNE is a ticker symbol. We'll go take a look at Sony Corp. But you can see you got this ABC formation that the Nikkei is doing. And, you know, I've been calling for it to get down into this 0.786. Now, just because it hits that number, that's not the time to go ahead and take the trade. You want the market to prove itself to you, especially on a run like this, where the Nikkei went from the lows of inside the 81 area, 8100 area, got down to a low of 8135, going back to November 25th. That makes sense because the 786 area, which is logical, doesn't mean it has to stop there. The market will absolutely tell us if it's going to stop there, and if not, then it's going to go all the way back and test the November 25th lows inside the Nikkei. Remember, this is a one-world market out there. Let's see, what did we not cover? We did not cover the Shanghai marketplace. So let's go take a look at the Shanghai, see what she is doing. Looks like a relatively orderly pullback in the Shanghai, trading out at 24.57. Shanghai was down 1% last night, down 29 points. Just doing a retracement here, folks. So if we go from the swing point low on February 29th all the way to the high that was put in on May the 4th, the Shanghai headed to 24.33 before giving us its next piece of information. Got the Dow up 80 points, S&P's up 9. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow up 84, S&P's up 10, King Dollar up 3 ticks right now. Gold trading out at $15.49. So let's take a look at gold, see what it's doing. It is on a long-term sell signal. You had the death cross occur last night on gold. That's when the 50-day exponential moving average crosses through the 200-day exponential moving average. At the same time that it's doing that, it is testing the lows that are out there. 2 sets of swing points that it's going against. It's going against the swing point from December the 29th. That only had 114,000 contracts. The low there is 1523.90. It did not get all the way down there in the today's trading session. It actually got down to 1526.70. But you do have more volume today. You have 130,000 contracts. Gold will not really be back in its range until it at least gets above that swing point from December 29th. You'd need to see it close above 1562.80 to set up one heck of a nice trading range, because now you'd be talking about getting up maybe into the 1750 area, possibly, certainly at least into the 1644 area. Also, in 1644, what's going to keep our 1666, which will keep it inside that range, ends up being the swing point from September 26th. That's the other swing point it's going against, which has massive volume. That has 359,000 contracts in there. The high, 1666. The low of 1535. That area did get tested again this morning. Gold again trading out at 1550. Not out of the woods yet. And I don't think out of the woods for a long time, even with a bounce here. Let's go take a look at some of the sectors within inside the S&P. Actually, before we do that, I'm going to switch back over because you got the markets up. We've been trading here for an hour now. Let's go to the 10-minute charts on the ETFs. We're going to populate the screen with the four ETFs that we follow. IWM in the upper left, Qs in the upper right, lower right is the diamonds, and lower left is the SPYs. Now, folks, what do you notice here? You got price going this way, right? Let's just Let's just go ahead and make a little bit larger screen here. So let's take our line. Price is in this direction, right? Make it nice and pretty here. And volume, folks, is in which direction? Do you call that real supply and demand, I ask you? I don't think so. Absolutely not. Price is going up. Volume is going down. You don't have to overcomplicate things. You don't have to be paying attention to any news that's out there. All you have to really do is just pay attention to the stock charts. That's all you've got to do. That's on the diamonds. The diamonds being up 75 points right now. No time to celebrate and think that this down move is over. It certainly is not over when you take a look at conviction in price. Let's go look at the Qs, right? The leader on the way up. Let's go take and we'll do the same thing. Again, even though it's a 10-minute chart, it certainly gives you a pretty good gauge. So here we've got price on the way up. I haven't done this one for a while. And we've got volume in which direction, folks? You got it. Just start right there. Volume on the way down. Not real price and volume from my standpoint. How about yours? Let's go finish it off here, just as long as we're having fun drawing with our tools. Let's go take a look at the SPY 10-minute chart out there. Price, as we know, moving on up. There you go. You got that price move. And let's go take a look at the volume move behind the SPYs here. See if there's any synergy. Well, what do you say, folks? You think there's maybe a little synergy out there? You got volume moving to the downside. Volume moving to the downside and price moving to the upside. Doesn't make a lot of sense to me. Now let's finish it off by taking a look at the small caps. See what the small caps here are doing. Again, on the 10-minute chart, we got volume this morning going to the upside. We'll just stop it right there because you get the picture. And you're probably bored with me drawing these patterns. And volume going in which direction, folks? Absolutely to the downside. So, folks, I would say no conviction at all behind this move whatsoever. So now let's go over and take a look at the sectors inside the S&P 500. Where's my little sector button? There we go. There's the spiders. Now, sector-wise, we can go take a look at the technology sector. In fact, we'll do that, and we'll also take a look at Apple, because we want to see what Apple is doing. Of course, I have the energy sector up, but that's okay. We're going to go to the XLK. That is the technology sector out there, and we'll blow that up here on the screen for you right now. You got the XLK trading out at 28.47. XLK doing nothing more than testing the March 6th area. Now, March 6th has a volume of 14 million shares, low of 28.39, high of 28.60. Pretty narrow swing point, wouldn't you say? Let's just blow this up. Let's just go ahead and draw the line across the swing point high. Even today, with the markets trying to push their way up here, folks, the XLK hasn't been able to get up and test the top of that swing point from March the 6th. You came down into that swing point on today's Wednesday, on Monday, with some accelerated volume. You had 14 million shares going into 14 million shares. Now it's just really building some cause to just blow through that area. You've got a ABC down. It's not a confirmed ABC down on volume. That A to B equals CD, folks, looks like this. Your A point, I'll go back and tell you what the A point was. Your A point here is on April the 3rd when you were out at 30.62. The B point, as it gaps down into April 23rd, makes it looks like a 0.618 retracement back up to the high on May Day, on May the 1st. The 1-to-1 is actually what it completed yesterday. A 1-to-1, A to B equals CD down. Makes sense you would take a rest, right? Makes sense you would take a rest, and then it'll continue its move down, and it'll move down into October 27th, where it'll complete a 1-to-2, A to B equals C to D. That October 27th level, folks, the high there, 26.56. Let's go take a look at a couple other sectors out there. Well, how about the number 2 sector from a weighting standpoint? That would be the XLF. The XLK is 23% of the S&P 500. The financials are 15%. We know J.P. Morgan has got some troubles, and certainly Jamie Dimon has got more troubles, but he was expecting it. That's why you go ahead and you accrue another $8 billion or so in legal expense, because you know that the freight train is coming. And he saw that freight train coming and certainly got out to the media and wanted to try to squelch as much as he could. But unfortunately, that train is coming down the tracks. If I could play that Johnny Cash song right now, I would. But I can't. So we're going to go take a look at the March 6th swing point out here inside the XLF. That March 6th swing point, folks, has got volume of 93 million shares. Now, you're inside it. You came inside it on the 14th with 91 million shares. You yesterday had 99 million shares. You couldn't bust below it. It got down to a low yesterday of 1440. The actual swing point low is 1440. Stops right there. All it's doing is building some energy. Let's go see if it completed an A to B equals CD down yesterday. Another reason for it to just pause a bit. I would say there we'll use this as our April 23rd area as our B point. C point is going to be May Day, May the 1st. And no, it has not totally completed an A to B equals C to D. That's right, Folsom Prison. And so you can see here the financials not showing any strength behind any of this move that we have here. Volume today, in fact, it's showing strength. The strength is, if you just did that same line pattern, stock, you got price moving down. Let's just do it on the daily chart. So here's your swing point. You got price trying to work its way up, and you got volume working its way down. So, you do have conviction. You do have signs out there. All you got to do is just read those signs. And so the XLF wants to get down into the October 27 swing point where there is volume, 232 million shares. And that high is 1417. I've got a request to go take a look at Hi-Ho Silver. So let's go take a look at Hi-Ho Silver. Silver has not gotten down to test the swing point low. The swing point low, now it's inside its range. And folks, that range I'm talking about is the hammer candle. One heck of a hammer candle. One of the prettiest hammer candles out there that you could have. And, that hammer candle goes back to September 26th, where you had a high of $30.97, a low of $26.15. You did get down and test that. You get down as 26.14.5. That's a beautiful thing, but only on 32,000 contracts. That 32,000, again, pushing against 104,000 contracts, gets down there, tests it, and moves higher. What are you doing right now? You are trading, you've broken out of the swing point, the last swing point, which was December 29th. Let's go ahead and draw a line across the top of that. Then I'll get rid of some of the lines and some of the other data that's out here. It's kind of old news. We don't need old news. In fact, let me just get rid of, I don't want to get rid of it all. Let's see here. How would I do this? I just don't want to get rid of that hammer one. There we go. So we've got this up to here. Delete that. Okay. Let's get rid of the retracement area. We got that. There we go. So we're going to clean it up a little bit here just so you can take a look at it. So, it's trading above the swing point. This session's not over, but it is trading above the candle from December 29th. That high out there is $27.84. You're trading at $27.90 right now. Volume back there, obviously December 29th, going to be a low volume day. You've got 32,000 contracts. Today so far, you've got 30,000 contracts. So you're going to have certainly the volume and the juice. But to me, what silver really wants to do is wants to get back into the 26.14 area, give you its next test. What you really want to see it do is get to 26.14 on light volume, and then it just sets up, look at this nice sideways trading range, maybe from the lows of $26 into the, maybe it'll get up into the range here of maybe $33. So that is on silver. Hope that helps Lucky out in the den. And let's continue just simply looking at what else is moving in the markets. We haven't looked at any individual stocks. We did take a look at Abercrombie & Fitch earlier. Let's go take a look at J.C. Penney. Let's go see what J.C. Penney is doing. Well, actually, before we do that, I know that a lot of release of information to the SEC as far as hedge fund holdings, other fund holdings were released yesterday. And so one of the releases, I didn't catch all the information. I heard that Warren Buffett, if you want to be a Warren Buffett, I heard he was buying GM between January 1st and March 31st. Somebody in the den probably can, in fact, confirm that. And I think there was another stock that he might have been purchasing. Well, if it really was that he was buying stock in between that time period, well, folks, then he was buying the stock anywhere between a low of $20.96 all the way up to a high of $27.68. So that is the range, and where GM is traded at right now is at the lower part of the range. It gapped up this morning. That would make sense after a release of information. And if you wanted to follow the Warren Buffett strategy of buying and holding stocks, then you'd be able to get in on GM at a price probably lower than what Warren did as he was accumulating shares. So that is on General Motors. I'm not suggesting that you follow that strategy, just simply providing the information to you. Let's go now. Let's go take a look at a couple things. Have some requests out of the den to go take a look at EXM. So let's go take a look at that. XL Maritime, that is a dry ship carrier, and EXM is not anything you want to step in front of just yet. In fact, I'd say you want to be very careful going into any long positions. I'm just going to go ahead and get rid of all of the stuff on this chart here. Now, you know, if the market were in a northerly direction, then that would be a whole different story. Why would it be a different story? Well, because EXM has come all the way back to the breakout area. And the low of that breakout area, you got a couple different spots that you could use as your kind of your line of demarcation. What you can do is go all the way back into the swing point where it is traded to. It's not outside of that swing point yet. That swing point being December 30th. The high there, 149. And the low of 137. If you just simply draw your lines across, take your line tool or take Steve's line tool across, what you'll see is it's traded, has not gotten all the way down to the bottom. But let's take a look at the volume as it has gotten inside that swing point, as it's traded inside that swing point. You will see no juice as it broke through that swing point, as it has gotten near the bottom, no juice in it. But even though it's trading at $1.40, folks, it actually can go lower. And, you got to get the market right. Getting the market right is about 50% of the battle. So, you don't want to step in front of EXM. I don't think you want to step in front of really much these days when it comes to individual equities, other than maybe looking for some short-sighted trades. And if you go over and take a look at some of the IBD 50 stocks, let's take a tour over there. Let's see how they're trading today. What you really want to be doing is taking a look at the IBD 50 stocks and trying to identify which stocks have held up the best during this correction that we are in. Right now, one of the high flyers, the number one stock, I believe, in the IBD 50, Sturm Ruger. Well, Sturm Ruger is the leader in the clubhouse today on the way down with the market to the upside. So you should say, something to think about. Well, let's go take a look at RGR is the ticker symbol. When we get back from this break, we're going to go take a look at Sturm Ruger, number one in the clubhouse on the way down today, number one on the IBD 50. Not behaving like the market, right, folks? We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Imagine that, folks. Dow now up 50 points after taking a look at the volume on the way up versus price on the way up. Dow up 50 points, S&P's up 7, Composite up 15, Small Caps up 5, NDX up 10. You got King Dollar starting to make its move up 7.5 ticks right now. Gold trading out at 15.46. Before we went to break, we were taking a look at Sturm Ruger. RGR is the ticker symbol. Now, Sturm Ruger right now today is coming back into its gap up into, what we'll call a little junior breakout area. And that breakout, folks, we're taking a look at the candle. Hopefully you're following along with us on Tiger TV. March 22nd, the stock gaps up with 1.2 million shares. The session before it did 189,000. So I consider that to be wide price spread because you want to go ahead and fill in your mind, at least fill in that gap. So you get wide price spread and accelerated volume. Sturm Ruger moves all the way up to a price point of... on May 1st, gets up to a high with 1.6 million shares. In fact, gets up to a little bit, no, that was the high, 1.6 million on May Day. So really not too bad as it's making its high because when you broke out, you did 1.2 million shares. The problem with Sturm Ruger is that right here, the day of May 8th, when it pulls back and it's pulling back and then it starts all of a sudden, boom. Maybe that was an earnings release. I don't know what it was. Doesn't really matter what it was. What you need to know is you had 1.7 million shares come out of that balloon as you're coming into the breakout area. You don't want to see that. What it's setting up is it wants to go to lower price. Now, the top, I should say it like this, the bottom of the gap up candle from March 22nd, 45.11. Today, it has gotten down to 45.05. You trade out at 45.62. Volume-wise, though, 390,000 shares. So it's going to do, I don't know if I can do that math, maybe about 1 million shares or so today. That's 1.2 million shares coming in the breakout area. Way too much. So then, what you do with the chart is just go back and take a look at the next high volume area on the daily chart. Then you'd go take a look at the weekly chart and so on. Well, if you take a look at the daily chart, your next high volume area is going to be here in the September 1st, August 31st area when it was doing volume of 1 million shares. So you break this area just simply because of the volume that it's got on the way down, and it's making a real nasty AB equals CD down pattern. It'll get into that price point area. The high of that swing point is $36.85. The low is $32. So let's say you've been fortunate enough to ride Sturm Ruger up to the top. And, at $59.60, $58, $57, you weren't a seller. Today it's $45, and you're wondering, what should I do? Well, number one, you ought to have a stop in place. You should never have let that happen to begin with. Have a stock get up to $60, and now it's at $45. A $15 on $60. What are you talking about? 20%? Giving back 20% of your profits? You don't want to do that. You should never do that. Now, if you're saying, well, I think it's going to come back, it's good. This stock is potential, which was the number one in IBD, depending on volume patterns as it gets through the B point. This thing could have some real problems. And we are seeing a number of the IBD stocks just simply become broken stocks. So if you're saying where should your stop be, folks, if you have ridden it all the way down here, if you get a close below 42.04, you're at 45.80, 45.49. I'll assume if you've ridden it down, 20% so far, you still want to give it some room. If this closes below 42.04, please take your profits and get out. You probably still have some good profits in it. And if you don't have profits in this stock, then get out now and spare yourself any more losses to the downside. And that's the number one stock inside the IBD 50. If we go take a look at the number two stock out there, Apple. We haven't taken a look at Apple all day, so let's go see what Apple is doing out here. AAPL. You got Apple up $1.64. And what Apple did yesterday was it finally closed below the April 24th swing point. That was the swing point low of 555, even Steven. You're trading at 554 right now. You're still below that swing point. Folks, Apple's making an ABC down. Apple also, another one giving up the ghost. That was after earnings that everybody wished they could have. Folks, thanks for being here. Stay tuned. We're going up to Basil Chapman and Newton, Mass., out to Tucson, Arizona. Larry Pesavento back here with the David White Band. Have a great day. I look forward to seeing you tomorrow morning, 9 o'clock. Tom is back in the saddle. He'll be back here from 4 to 6. Take care, folks.